Now, in the last few moments, the latest figures have come from the Italian economy, and it shows that the country remains firmly stuck in recession. The economy contracted for a fourth consecutive quarter, declining by 0.7% in the 3 months to June. Well, that's adding pressure to Prime Minister Mario Monti, because he's trying to bring government finances under control and, at the same time, convince the financial markets that the country can continue to finance its $2 trillion debt without the help of an external bailout. Well, Stefano Cordero di Montezemolo is from the European School of Economics, and he joins me now from Rome. A very good day to you. Just taking a look at these numbers, it's no real surprise given the gravity of Italy's financial situation.
No, no surprise. Personally, I was saying that the recession at the end of this year should be around 2.5 GNP. Minus, obviously. So it means that the data related to the industrial production are in line with this expectation, in the sense that at the beginning of the year, the forecast was around minus 1.5 and 2, but I think that at the end the situation will be even worse.
But again, these figures illustrate that conflict which really characterises what's been happening with those Eurozone countries in trouble. That on the one hand, you're trying to cut your deficit to actually bring you in line with the Eurozone, and at the same time it comes at the expense of growth. People are going to suffer here.
Yeah, the situation is quite bad in the sense that the last data say that the fiscal, revenues for the government are increasing. So it means that paradoxically, the situation at the financial level for the government is getting better. But this means that there are lower resources for the economy to recover and to have a new growth path for the future.
Yeah, but I mean, when is this new future likely to arise? Because I would imagine that the Italian public, who are suffering under the weight of these things, they want to see the results. They want an end to austerity. So is there a point at which the Italian economy will have turned the corner?
The problem is that they are, all the things are connected, in the sense that if we have high government bond yields, it means that we have a higher cost for the government, and so we have to find these resources. So we have to cut the cost for the government, and we have to sell probably state assets in order to find the resources to invest in activities that can be support a new growth path for Italy.
Yeah, I mean, you mentioned earlier the government bonds. I mean, we've actually seen the bond yields on the longer maturities actually hitting that 7% mark, the so-called danger zone. But given these figures, what's likely to be the pattern on those longer maturities? Can we actually see it busting through that 7% zone? Because again, there is the fear that they could have to take a bailout, whether they like it or not.
That's a paradox, in the sense that the higher the yield for the government bonds means that the difference between the yield and the GNP growth rates are increasing, and this means higher growth government yields because the markets are thinking correctly that at the end we cannot sustain this difference in the longer run. So we have to find a way to break this relationship, and the only way is to move resources from activities that are not productive to new investment activities.
Right, so a challenging role there for the Prime Minister, but we'll have to leave it there. Thank you so much for joining us from your home there in Rome.